So first of all, apologies that the actual camera does not work there, but if you want to see who I am, I'm the one in green on the right-hand side. So my name's Mark Hart here from Memphis Investment Properties. I'm one of the partners, chief sales officer here for the company. And our whole goal and what we're going to talk about now is building a passive income stream from the comfort of your home. So here real quick, my story. There's a picture of myself and my wife at the top left and our two dogs. And I'm from Chicago originally, but I love the mountains and the outdoors. So I went to college at the University of Denver and got a hospitality degree, and I decided to move into the mountains of Aspen, Colorado to go work at a country club during the summer and the Little Nell Hotel during the winter time. And I absolutely loved what I was able to do. But as soon as I started to do the math, I realized that I would never be able to achieve financial independence. So I decided to really dive into real estate. And the first book I read was Rich Dad, Poor Dad, which I'm sure many of you have done before. If you have not read it, highly recommend it. Just after reading that book, when I met my wife, then she said, well, I'm going to go become an eye doctor in Memphis, Tennessee, because they have one of the best optometry programs in the country. But I knew that if I was going to leave the mountains, leave Colorado, leave hospitality, that I would have a full shift and move into real estate. And I was very fortunate that the first individual that I was able to meet is Jim Reedy here down at the bottom. So he's my partner. He's a legend in this entire space. He's been in Tennessee his entire life. He graduated from the University of Memphis with a real estate degree, and he actually got his first single family rental property in 1979, self-managed that single family home and built up that portfolio to about 400 single family rental properties by 2008. And then as soon as the crash happened, everyone and their mother wanted to be a real estate investor. And he finally had the systems and the processes built out to help other people accomplish their goals. And so ever since then, since 2008, that's exactly what he's been doing, is helping mom and pop investors build a portfolio of single family rental properties, all from the comfort of their home. And to this day, I mean, he's done over 6,000 renovations in his career. We've got about 3,000 properties under management. So he's just an incredible mentor, incredible person, and that's just what makes this whole world go round. So here's the problem, right? The actual S&P returns after tax since 1950 is a measly 6.8%. It's really not bad at all, right? It's easy. You just set it and forget it. But the question is how can you safely and passively diversify from the stock market? How can you break into that alternative investment class without all the time and a high risk tolerance and a lot of experience? And that's exactly where we come into play. That's where single family turnkey rentals comes in to help. So what that means, a single family turnkey rental is a newly renovated or a newly built single family home that you're actually going to own. It's your property. You've got the deed. So we're going to help you buy the property, hold your hand through the process, and then we're going to perform all the property management services on the back end. So you don't have to worry about the tenants or the toilets or the turnovers, and you can be a passive investor. If you want to be that individual that finds a foreclosure and puts on a new roof and renovates it themselves and does all the management themselves, well then, we're really not a good fit for each other. We're here for someone that's successful and that just wants to diversify a little bit and get a better return than the stock market, and they don't want their money just sitting in a checking account. Here's a little breakdown of the ROIs that our investors are getting on a conservative note. The one thing I want to preference here is this is assuming a 20% down ROI. So you can use financing for the other 80%. And the first one is the cash on cash return. Think of that in terms of a dividend, right? All the cash flow that you're going to get back, true net cash flow, that's going to be 10.2%. And this is also year one. What's really exciting about our properties is we even have a 4% rental increase at year two. So this will be going up. Then properties are appreciating. There's a massive supply problem here in Tennessee, which is causing some incredible appreciation. And if you see that 11.3%, that's not the appreciation rate. This is based off just a 2.5% appreciation, because that's the average appreciation in Memphis over the last 30 years. So we want to be very conservative. But what's great about real estate is you can leverage, right? You can put 20% down and then finance the rest, which essentially means that your appreciation, you have to multiply that by 5. And that's why, I mean, here in Memphis, we actually appreciated 12% last year. So if you multiply that by 5, our clients got roughly a 60% ROI just in appreciation alone. And that's one of the reasons why our properties are selling out in minutes. It's really exciting, but that's more of an outlier. Then mortgage principal reduction, what that means is if you do get a loan, well, the tenant is actually going to pay for the mortgage. And of those mortgage payments, you have the interest and the principal. And the principal is just like going into a checking account that's kind of locked away in the house. But that's increasing your net worth every single year, every single month that the mortgage gets paid. So that in itself is an ROI. Plus a little bit of tax savings here. And this is going to be your total return on investment. Now, our clients were able to do better than this last year. If you just pay in cash, it'll be a little bit, this will be closer to 15%. So every situation is case by case. So first of all, if you're here trying to build a portfolio of rental properties, you got to pick a market. Memphis is ranked 33rd out of the 75 largest metros for our ability to manage our debts. We're doing better than a lot of our competitor markets, right? You can invest in turnkeys in other markets than just Memphis. If your city doesn't do a good job at managing their debts, well, they're just going to raise taxes, right? And all that is going to do is take away from your ROI. For those of you that don't know, Memphis is right here in the sun, right there in Tennessee, centrally located, and it's an incredible place to live. Frommer's actually just said it was one of the top cities to visit in the entire world in 2019. One of the reasons is we have a very warm, mild climate here. This is great from a real estate investment perspective, as well as a business and an industry perspective, because the whole goal is to just reduce risk. If you own rental properties in Wisconsin, well, now you're going to have to worry about being frozen for multiple months, having snow on the roofs, frozen water lines, plumbing lines, and even paying someone for snow removal services. So these are all things you do not have to worry about in Memphis because of our warm, mild climate. Then we're also far enough off the coast to the south, so you don't have to worry about hurricanes, right? So if you're in Texas or Florida, you may have to get flood insurance. Your property insurance could be higher just because of these additional risks, which you don't have in Memphis. Even with tornadoes, we're far enough east that we're not in tornado alley, so you don't have to worry about those monsters coming in and ripping your roof off, which ultimately is one of the reasons why we have low property insurance. Because of our location, we're just really lucky. We are located in the center of the US based off of population. And all that means is we can put goods, packages on a train, a plane, a truck, and get to more people than anywhere else in the United States. We are the #1 fastest growing industrial market in the entire United States of America. So our employers are actually been doing better during COVID than pre-COVID, which is one of the reasons why Memphis is just such a great market to invest in. We also have the busiest air cargo hub airport in the entire Western Hemisphere. So because of all these jobs, we're a top 10 city for job seekers because our employers are actually doing well. So they've been hiring. And all of that, we bring this up because all of these jobs, this is where our tenants are working. FedEx is actually spending another $1.5 billion to expand their infrastructure here in Memphis because they really see the importance of it. Not only is FedEx here, but Amazon has a massive presence here in Tennessee. They just recently opened up their 7th distribution center here in Tennessee, and that's actually their 5th here in Memphis, which is massive because this, once again, this is where our tenants are going to be working. So right here you got Nike, and they've got this has been here for a couple years now. It's 2.8 million square feet, one building. This
Wow.
is the largest Nike's largest distribution center in the world, one of the largest distribution centers of all distribution centers in the world. And this is actually 49 football fields under roof. This was so successful, Amazon bought the parcel right next door and just built their advanced robotics facility on the parcel next door. And that actually is already opened and fully hired out and operational there. So just like others, Warren Buffett himself, he actually purchased the intermodal unit here in Memphis. So what that means is it's essentially when a train comes in with the cargo, they will have a crane that they can move the container ships from one railway line to the next railway line. So in theory, you've got 7 Class A railway lines that connect different regions of the US. We also have a huge medical center here, home to the world famous St. Jude's Children's Research Hospital. All right, so here, this is what's really important when you guys are analyzing different markets. You want to look into it and you say, is it a linear market or is it a cyclical market? The cyclical markets are more boom or bust type markets to where they'll do really, really well, but then as soon as anything happens, COVID, 2008, they crash. What if we're in a different market? We actually had a client that told us they were in Las Vegas. They had a property for $1,000 a month rent, and then before 2008, and then when the crash happened, they could barely find a renter for $700, which that's terrifying. What happened in Memphis during 2008? Well, our $1,000 rental, we were able to re-rent for $1,000. We were able to re-rent all of our properties for the same rent pre-2008 as post-2008, which is massive. Half of Memphians are renters, and 40% of the overall MSA are renters. So we have an above the national average demand for renters, which is why in 2008, even during COVID, all of our properties, we were still able to keep that strong rental demand, which is very, very important. We've appreciated at 2.5% year over year over year for 30 years. So that's what we put into our pro formas to be conservative, right? If you finance these properties, well, now that number could quadruple. And that's what's really fun about real estate. So then over the last 10 years, there's a 3% appreciation. And since 2016, we've appreciated 5%. And here's the big one, in 2020, appreciated 12%. So for our clients that finance their properties, that's a 60% ROI, which is not bad, which this is how you scale, because those clients are now doing a cash out refinance, pulling out enough capital to go buy another property and scale their portfolio. This is what we're really excited about is Memphis is the 3rd least impacted market in the entire United States from COVID. Our rents have actually increased during this time because during COVID, there's a massive, essentially paradigm shift to where people are leaving dense urban areas. They're leaving the city and moving to the suburbs. Now, there is some negatives, right? Our collections rate did decrease by 1 to 2% by June, July, and all the way up until today. We've been back to pre-pandemic collections rates. I mean, we actually have a waiting list in certain areas for tenants. You as an investor have a 95% chance that the day you own the property, it's yours, that there's a renter in place for exactly our target rent. We got about 80 employees to pull this off, which is just a well-oiled machine here. In the background is actually our office. It's 22,000 square feet where all the different departments, all the people, all of our team members work, and we actually own that office. So the Reedy family, they have 46 years of experience in the Memphis market. This isn't something brand new. This is something they've been doing the same thing in the same place for almost 5 decades now. And so because of all of that, we've created our proven turnkey process. So this is where we're replicatable, we're duplicatable at will. And what we do is we will go out into a neighborhood where we've personally owned a property and had success there. And we will go buy another one that's distressed, a fixer-upper. So we own the property ourselves. We will then renovate that property so you don't have any deferred maintenance. You don't have any CapEx, right? The goal is to put on a new roof, a new HVAC, a new water heater, just so on, update the entire property there. Then we have the sales side. This is where we will actually help you buy the property. We will hold your hand through the buying process so you never have to leave your house. Then once you own the property, we are the property managers, right? We started the company. We will do everything from placing the tenant to collecting the rent to depositing the rent into your checking account every single month. Here's a map of all the properties that we bought last year in the Memphis area. So you've got downtown Memphis here on the left, the Mississippi River running north and south. We actually did 322 of these last year. So then once we buy the property, on the left, here's the before and the right is the after. Then one of the big things we want to do, you can look at the roof at the top left. That roof probably has at least 5 years left of life on it. Even though it does have some life left, we're going to replace that because we want to make sure that that roof is either brand new or just a few years old. They don't need granite. Everything doesn't have to be white. They just want a clean and safe place to raise a family. And they just want the AC to work in the summer and the roof not to leak when it rains. Right? This is what we're going to make the kitchens look like. And all the other appliances the tenants are actually going to bring. Then we'll even give you a little 1-year craftsman guarantee for the work that we do. And this is what we've been helping investors such as yourselves with property management since 2008. So here are the different services that we will provide for you so you don't have to do it. So you can stay a passive investor. The first one is we've got our in-house leasing agents that work for us full time. We don't use 12-month leases. We're able to use 24-month leases with a 4% rental increase between year 1 and year 2. We'll also do in-house screening and final approval as opposed to farming it out to a third-party company. The criteria is they have to make 3 times the monthly rent net of their income. We will even set a budget for our tenants and go over all their income and expenses to make sure that there's enough money left over at the end of the month. And to pull it all off, we throw in some technology as well, like an artificial intelligence system that gives us a score on the likelihood of the tenant paying or not. And we'll even use little lock boxes that we'll put on all the houses that will give us real data and feedback for leasing. So we can say, hey, we've had 10 showings, 4 applications, 2 got approved, and someone's moving in 2 weeks. And because of all of this, our average tenant stay is over 3 years. Another thing you don't have to worry about is collections. We've got 3 individuals whose full-time role is to collect the rent for you and to be proactive as opposed to reactive. So they're calling the tenants, emailing them, putting things in the mail, visiting the property. We have in-house maintenance. So always ask the property management company, do you outsource the work to someone else and slap on a markup, or do you do it all in-house? So for us, we don't slap on a markup. We have an entire portfolio management team, right? So you're going to be assigned to one person, you'll have one number, one email, and it's their responsibility to go out into the departments to get the answer for you. Kind of act as like a liaison per se. So it's just very easy for you to communicate with them. And of course, there's fees, but we're very transparent about all of them. These are all essentially below market fees, which we're really, really proud of. But most importantly, who pays for these fees? Well, the tenant does out of their rent. Now, we want to make sure that you completely understand how this investment is performing. So that's why our accounting department will deposit the cash flow into your accounts every single month. They'll even send you a detailed profit and loss statement so you can be the asset manager of us. And if you have more questions, you can even go into your own owner's portal where you'll have your own username and password, and you can see exactly what's going on with everything. Then at the end of the year, we'll give you a Schedule E for any tax benefits. Now, of course, everything we just talked about was all the good, but I love talking about the bad. I love talking about the risk. And the first one is picking the wrong property manager, but more so someone who doesn't do it full time. The eviction rate is going to depend on the type of property you move forward with. The example that we had with Ramez was a B class home, and that's a 2% eviction rate. You can go into an A class neighborhood for a 1% eviction rate and C class for a 3. Always, always, always get a third party inspection uh, and an appraisal when you're buying a property, and make sure that that's in the contract and it's contingent on those items. So always get photos and a video to confirm what you're buying. Then another issue that we see people making is that their end goal is just one property. They don't have an end goal of owning multiple. And the reason that's an issue is because if that one property, the tenant goes away or doesn't pay rent, well, now you have to cover those expenses out of your own pocket. So that's a liability, right? No longer an asset. So if your goal and your long-term goal is to acquire a property a year or a property every other year at a minimum, well, then you should be a real estate investor. Otherwise, just stick to what you're doing with the stock market. And another pitfall that we see people make is they say, well, okay, I want to give it a try, but I just want to dip my toes into it. So I'm just going to buy the most inexpensive, cheapest house possible. But what does that also mean? Higher eviction rate, higher risk, right? Now, obviously, it's less capital, but it's higher risk. So what I always recommend to our clients is to actually buy less properties, but just in better neighborhoods. All right. So that's it. So now if you're interested, you want to take action, please reach out to me. I can get you our turnkey starter pack, which is 30 pages. It basically goes over everything we just talked about and more in detailed written down.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.